Are you looking to improve your credit score for the purpose of qualifying for a mortgage? I have got 3 tips today for you that you may not already know that are going to help you to maximize your credit score, whether you can't qualify because your credit score is too low, or if your credit score is already good and you just want to make it better for the purpose of getting a better interest rate. These tips are for you. My name is RJ Baxter with Intercap Lending. Let's get right into it. The first is high credit card balances compared to the max. The thing is that even if you pay off your credit cards in full every single month, the credit card companies, they report to the credit bureaus once per month, usually around the billing cycle. So when your bill comes out, that's the balance that is reported. So even if you pay off your credit card in full, if the bill comes out and shows a balance, that's going to report to the credit bureaus. And if that balance is close to the max, it's going to bring your credit score down. The general benchmarks are 10% of the max, 30% of the max, 50% of the max, and then either right at the max or above the max brings down your credit score the most. So the advice on that is to get your credit card balances paid down to zero before the billing cycle comes out in advance of applying for a mortgage, because those lower balances are going to help to maximize your credit score. The next thing I see commonly is multiple credit inquiries in a short period of time. The credit models allow for one credit pull about every 30 days to not affect your credit score too much. So they know that you have to apply for credit from time to time. So if you're only applying for the mortgage, it's not going to bring your credit score down in that short term. However, if you're applying for a lot of things, you go out and buy a car that same month, and you apply for a credit card, then you buy some furniture, that's going to bring your credit score down. So that's something to watch out for when you're applying for a mortgage. And the last one is paying off collections without having them removed from the credit bureau. If you pay off a collection, the problem is it brings it to the present day as if it just happened last month. Even if that collection was from 6 years ago or 8 years ago, it's going to affect your credit score the most, because credit events that are more recent affect your credit score more than credit events that are in the past. So as soon as you pay off that collection, it shows activity happening this month, and it brings it all the way up to the present day. And it could potentially crater your credit score. Even though it's paid off, it's still a negative credit event. So my advice on that is, if you're going to pay off a collection, contact the collection company, plead innocence that you didn't know about it, and maybe you didn't know about it, and say, if I would have known about it, I would have paid this off in full. I'm trying to apply for a mortgage, and this is killing my credit score. If I pay it off today, will you agree in writing to remove it from the credit bureaus? And a lot of times they'll say yes. And if they do, have them put that in writing that they're going to remove it from the credit bureaus. And then that way it'll be completely removed from your record. And once that disappears from your credit report, it'll help your credit score improve. So I hope that helps you out. Now, if you're looking to qualify for a mortgage or get pre-approved, give me a call. Happy to talk to you about that or answer any of your questions about credit or anything else. Once again, my name is RJ Baxter, Intercap Lending. Have a great rest of your day.